escalating narrative of U.S. China trade relations. Donald Trump has consistently maintained a firm stance emphasizing the necessity of addressing trade imbalances before considering any agreements. On April 6, 2025, aboard Air Force One, Trump reiterated his position, stating that there will be no deal with China unless the trade deficit is resolved. He highlighted that other global leaders were eager to make trade agreements, but underscored that resolving trade imbalances, particularly with China, remained a precondition for any potential agreements.
When they look at the fact that we have $1 billion trade deficit, when you look at the trade deficit that we have with certain countries, way over $1 billion per country, but with China it's $1 trillion, and we have to solve our trade deficit with China. We have $1 trillion trade deficit with China. Hundreds of billions of dollars a year we lose with China, and unless we solve that problem, I'm not going to make a deal. Now, I'm willing to deal with China, but they have to solve their surplus. We have a tremendous deficit problem with China. They have a surplus of at least $1 trillion a year. I think it's like $1.1 trillion, and I want that solved. And no other president's taken it on. I had to take it on the last time, and then we had a rigged election. No other president's taken it on. And so China is, they say the market's spoken. China is right now taking a big hit because everyone knows we're right. They have to pay tariffs because otherwise we have a surplus, that they have a surplus with us that is not sustainable.
Mr. President.
And we're talking about $1 trillion, you know that, right? We're not going to lose $1 trillion for the privilege of buying pencils from China.
On the idea of crashing the markets on purpose, there's been some speculation, partly because of the video that was posted on Truth Social, that there was some sort of deliberate effort on your part to have the market sell off. Can you talk about that?
No, that's not so. But I do want to solve the deficit problem that we have with China, with the European Union and other nations. And they're going to have to do that. And if they want to talk about that, I'm open to talking. But otherwise, why would I want to talk? And as you know, because of the tariffs, we have $7 trillion already committed to be invested in the United States, building auto plants, building chip companies, and all sorts of companies are coming into our country at levels that we've never seen before.
The imposition of broad tariffs by the U.S. administration led to a significant global market reaction. Australian Securities Exchange, ASX 200, dropped 3.7%, temporarily hitting a 16-month low and wiping out $100 billion in value. Major Australian stocks like CBA and BHP fell significantly, alongside a sharp decline in the Australian dollar, copper, and oil futures. Even significantly safe investments like gold suffered losses as escalating trade tensions between the U.S. and China deepened. China retaliated by imposing additional 34% tariffs on U.S. goods, further deepening the economic rift. Asian markets were worst hit, with Japan's Nikkei tumbling nearly 9%, Hong Kong's Hang Seng dropping over 9%, and Taiwan's stock index falling almost 10%, prompting stabilizing interventions. Metal markets slumped, with copper and other base metals hitting multi-month lows. The U.S. Treasury yields dropped as recession fears mounted, with markets now pricing in significant rate cuts by the Federal Reserve. President Trump defended the tariff measures, likening them to necessary medicine to correct long-standing trade imbalances. He emphasized the strength of the U.S. economy and stated that other countries were pressing for trade agreements, which he would consider only after addressing the deficits. Trump criticized the European Union, asserting that the U.S. has been economically exploited by it for a long time. The steadfast approach is consistent with Trump's earlier positions. In July 2020, he stated he was no longer considering a Phase 2 trade deal with China, citing several damaged relationships due to the coronavirus pandemic. He expressed reluctance to agree to any rollbacks on tariffs, emphasizing that China desired such concessions but he had not agreed to anything. The ongoing trade tensions and the imposition on tariffs have had a profound implication for global markets, leading to significant stock market sell-offs and heightened fears of a global recession. Analysts have warned of potential economic contractions, with J.P. Morgan forecasting a U.S. economic contractions in 2025. The situation remains fluid, with upcoming negotiation deemed crucial to stabilizing markets and addressing trade imbalances.